not put my trading stop. Let me give it a bit of breathing room because it could go for that huge liquidity pull up there. That trend is looking very strong. The reaction is great. All of these thoughts that creep in, discretionary intuition, maybe we can even call it. Do you battle with these voices, or is it just as mechanical as it can be?
In the beginning, I did. I was trading for money. I was trading for a need. So you battle with the greed, right? The first part of it is that you understand the technicals. At least that's what I try to teach the traders. You understand the technicals first. You understand why you're getting into the entry, where you're getting into the entry
Yes.
at. And now that you have the model down and you can see your entry go into profit more than it goes straight to your stop loss, now this is an uphill battle on you're juggling fear and greed. For the entry itself, it's just fear. You're hoping that you don't get
Yes,
stopped
true.
out. Now, while you're in position, it's fear and greed battling between what if it comes back and takes me out and now I walk away with nothing, but what if it can go more? And for me, it's really about trading within your experience. Some people don't have the experience to target that, right? For me, if I took that trade within a higher time frame POI, I'm not aggressively trailing or anything like that. It starts as a 1-to-1, and let's say we get into an hourly zone, right? The entry starts at the 50% of the zone. The invalidation is below the zone.
Are we
So
talking about the zone of, let's say, you're in a daily zone, you've seen a bearish break of structure. Is your stop at what caused the break of structure or the whole POI?
the whole POI.
Okay.
Because
So you do have a fairly large stop.
that's my invalidation though. That's not the stop. So what happens is you put in the low, you put in the high, you break it. There's the break of structure, right? That high that was put in went into a higher time frame POI. That was a manipulation in there. Or maybe it took out a wick to the left and then traded down and broke the low. So now that it's broken the low, I'm looking for it to retrace back into that previous range. The low that we just broke and the high that was put in, I'm looking for it to move back inside of there. Now, when it gets back in there, I can use one of two things. I can place my entry at the 50, place my stop behind the 70%. Or I could wait for something that I call candlestick structure, where you have bullish candles going in, you have a bearish candle that closes below the bullish candle. You have price retrace into the bullish candle, and then it drops lower. So when it retraces into that bullish candle, that's where your entry is, and your stop is behind that bullish candle that went up above. So it's essentially reducing your stop from the zone that's up there to now just where price currently is at. Now you can run the risk of being stopped out and then price actually leaves, but it's all about what you need to see within that, right? The closures. The one thing that I talked to Nagi about was any entry that I'm taking, I count my swings before I take the entry. And what I mean by that is, as price is making higher highs and higher lows, trading to a supply, you should at least have 4 to 6 swings before you're expecting price to reverse. So on the 1 minute time frame, if it's trading to a 15-minute or hourly POI, you should at least have 4 highs, 4 higher highs, 4 higher lows before price actually turns and goes the other way. So
Okay, why have you found that number in terms of the retracements back to the POI?
Yeah.
Should be in 4 sequence.
Yes.
And if it's not, it's just not a trade for you.
Well, that's essentially what I look for before taking up the entry to go against the POI that it's trading into. So if it's going into a supply, if I don't have those 4 swings as of yet, then I'm not looking to take an entry from that supply. It has not given me
you
a
use
certain...
it as an invalidation.
Yes,
Got it.
yes. So there are times where it can create one swing and then it can just impulse and go straight through the supply you were looking to short out of. If you waited for the 4 to 6 swings, then, and it's generally around 4, maybe 5 sometimes.
I'll have to test this. I never considered.
And anybody can look at this. You can go and back test the data. You will find that most times when price is looking to reverse, you're going to have the swings mature to about 4 to 6 swings. After that fourth swing, you might get a little consolidation, and then you see price actually trade the other way. That can be whether you're bullish, whether you're bearish. But if you get that swing count, back test it. Anybody can go and look at it. Run the data on it. Come back and tell me I'm a liar if you don't see it that way. But you're going to see it on every pair. You're going to see it in any market, regardless of time. That's the thing. So I became profitable in the Asian session because the Asian session taught me how many swings I should see before I expect price to reverse. So as you talk about with the ranges and how do you know to trade from one to the other, what you should see on smaller time frames are price leading up in swing counts to the other range. If it's tightening and going up to the other range, then you end up seeing it break, and now it's going back down to the lower portion of the range. So that's kind of my confirmation.
Yeah, it is actually, now that I'm thinking about just visualizing trades that I've taken, I can see this. It is for 3 to 6. It makes sense to me.
Yeah.
And kind of using that as a way to protect yourself from weaker points of interest.
Yeah.
That you may have taken a loss if you didn't think of it like this. I wonder if you have a similar analysis on not the retracement, but the new push, the pro trend movements. Have you found that it's in increments of maybe 2 or something, or it's only in the retracement that you consider it?
So with the pro trend movement, the pro trend, it should be leading to a low that led it up to that supply, right? All that means is that low that it's going to close below, there are other swings on the higher time frame that low that is going below is just another number.
Yes.
So what you have is it's 4 to 6 swings leading up to the POI, and now it's trading down to the low for the pro trend movement, right? But if you go on a higher time frame, or you look at the swing that it tapped into and begin to trade pro trend, you'll see that there's a number of swings coming down too. So you might have 3 swings coming down, and now here you have 4 1-minute swings going up to the third swing that's there. It taps into that third swing, and now it rejects and goes the other way. As it's going the other way, when it goes to the low, that's just a 4th swing being put in. So any direction, whether it's counter trend, whether it's with the trend, whether it's a retracement, whether it's a continuation, you should see that 4 to 6 swings there on any asset class you trade. And this is, again, regardless of time.
Interesting. How much do you allow your intuition to affect your decision making? Because you have years of market experience, you got thousands of hours of chart time. Certain things may not fit your rules, but you've seen it, you've sensed it, and you have a gut feeling at times. Is this something you follow, or is it just follow the plan?
So I was listening to, I believe her name was Linda. This was the creator of Turtle Soup.
Riz's pod, yes.
Yeah. I was listening to her. I can't pronounce her last name, and I don't want to ruin it. But I was listening to her, and she said that intuition is compounded experience over time. So there are times where she knows price is getting ready to reverse because it looks a certain way. But when she enters into the market, she might get stopped out because she thought that it might reverse early. There's the fear of missing out. She wasn't wrong in that idea. She was just early. And then when it actually leaves, now she's looking to get in, and she doesn't even have to really pay attention to it. It's just stick the order in, place it behind this low, and now you expect it to go. You've seen it so many times before. So intuition, it only comes from execution experience, nothing else. It cannot come from you watching a course. It cannot come from you watching someone else trade. It has to be from the times you've gotten stopped out and then you watch price go. That series of executions over time is going to teach you when to get in, where to get in, if you get stopped out, where you can get back in. You've been there so many times before. So it's really just compounded experience of executing. That's what it is, executing. It's not that I know, support turns into resistance, or some people tend to be librarians of concepts, right? You know, they know the NWOG, the NDOG, the Costco hot dog, all these different things that are there. They understand how it all moves, but they don't know how to get in. They don't know how to place the trade. They don't know how to feel confident with it. And that's going to come from taking the trade and seeing that execution through each time. So your intuition sort of comes from just the execution experience alone.
I agree. I see so many people that are great at backtesting, but they just cannot convert it to the live market. And they'll be like, I understand all your videos, I understand all the chart work. I just can't do it myself. It's this intuition slash experience,
Yeah.
which you can't buy it. You
Yeah.
can't fake it. You have to do the reps yourself.
Yep.
When you do have an intuition with the experience that you have now, do you allow it maybe not to affect if you trade against the plan, but maybe size up and say, okay, this I see as a favorable setup, and I'm sensing an intuition that this is gonna go my direction. Instead of my ordinary risk, let me double it or something like that.
So I tend to trade the same size every time I get in.
Okay.
I'm not someone who like, oh, let me, put 5 contracts on it instead of 3 because I know that this, like, I feel something in me that this will occur. I trade the same size each time. That's
Okay.
just the way I've always
So
been.
with your foundation, where you were a little bit more aggressive because of the need of money, I guess because it turned out favorable, it would have maybe reinforced a belief that this is the way because it worked.
Yeah.
How did you pivot away from something that was working to something that maybe seemed at the time of the pivot counterintuitive, or at least capping your progress or slowing things down to reduce your risk from 5 to what is your risk at the moment actually?
So it's about maybe 3 to 5%, somewhere around
It
there.
is as it always has been.
Yeah,
Okay.
yeah. It's the same thing. I believe that your risk is relative to the account size that you have. So if you're trading with $1,000 account and you're trading on something like NQ, right? You should only be trading with 1 micro. And every $1,000 you have in that account, you can size up to the next micro. So for me, I'll graduate in size to a new size that I'm trading with at this level, at this stage in my account. So I'm not sizing up based on feeling good about the entry. I'm not sizing down based on, feeling uncertain about the entry. But it's just whatever capital I have in my account that allows me to graduate to the next position size that I'm using.
On average, how many trades, because you could take 3 to 5 per day, how much do you usually an average week or an average month, how many trades do you normally execute?
I would say it's about maybe 2, sometimes 3 trades a day.
Okay.
Sometimes it can just be 1 trade. Like I mentioned, whatever I'm risking, that's the risk. The reward is always going to be something different every trade, right? It's how I manage that allows me to get a little more out of that trade. Sometimes I could be in a position and I'm just expecting it to trade to an internal high, and it starts impulsing. Trump gets up and says something, and now the market is just pushing the other way. Now I'm going to trail behind those candles. And what originally would have been, 1 to 3 R ends up being a 1 to 12, a 1 to 13 R, right? And if I can catch something like that during the day, then there's no reason for me to trade for the rest of the day,
Sure.
right? I like to, when I'm trading my position sizes or when I'm targeting anything, I love to be able to compare it to what I would have gotten at my previous job, my old salary.
Okay.
And if that was enough on the day, I did so much in my old salary. I did so much with my old job. If that was enough on the day, then that's all I got. If it was over that, that's all I got. And I'm okay with that. Some people need to learn how to meet their daily expenses and their budget first before trying to target 10,000 in a month, or if X amount of trades makes me X amount, during the week. They just need to be able to trade within the experience.
As a trader, it's very simple. You have to find an edge and then you have to have a mind so you can follow that edge. But how do you know if you're performing correctly or not? You have to know your data. And TradeZeller is going to show you everything that you need beyond the surface level win rates and performance and equity curve. It's going to show you detailed reports. It's going to be your backtesting tool, strategy testing tool, playbooks, notes, and it's going to be a full journal. It makes your journaling easier, faster, and more meaningful. Whereas if you were just documenting it on an Excel spreadsheet or taking it on your iPhone, you wouldn't be able to pull out the data that you need. The correlations that the AI within TradeZeller is pulling out for you. There's so much variety and utility within the software that I think it's essential for any trader. So the link somewhere below is going to take you directly to the TradeZeller website. I'm not getting paid. This is for you. If you want it, if you like it, go ahead and explore it, and probably you'll be using it for years to come.
I want to hear about when things don't go to the plan. So let's say you just have a bad day or a bad few days, and because it's, let's say, 5% per trade 3 times a day, you can, on a few losses, end up in quite a big hole of
Yeah.
20-30%. And then maybe the regret or the emotions or the fear or analysis paralysis, a lot of emotions that can weigh, amplified by a larger loss. When was the last time you encountered something like that, and how did you navigate it?
So when I take large losses that was unexpected, what I like to do is go back over them. I always tell people that let's say you have a 30-40% win rate, right? On the other side of that, it's 70% losses, 60% losses there. The same way that those wins had a pattern, those losses have a pattern too. So if I go over those losses and I actually look at what occurred, what I maybe didn't account for, there's a win on the other side of that. Most people frequently lose in the same place.
Yep.
So what I tend to do is go and look at where I struggled, what was occurring while I struggled. And then the next time that I do trade, I'm staying out of that kind of environment. So when you heard me talk about the rounding earlier, the reason why I speak about that rounding a lot is because when Price was creating that semicircle, that little umbrella, that inverse cup and handle, I would be under there trying to take all little longs trading higher. And Price would
Okay.
sweep out those lows, tap into something lower, and then move above those highs. And once it gets above those highs, now I'm trying to short down. Just ended up being ended up being offsides,
Yes.
at any point within that price action. So when I went over my losses, I realized here's the part that trips me up the most. Now I just have to stay out of that and actually trade something around it, right? Or maybe just trade according to the model that occurs. If this is happening on my model, then I can't take that entry because experience has told me this is where intuition comes in.
Yeah.
Intuition is not just to take the trade, it's also to stay out of the trade.
Yes.
So intuition has told me across time that this is something that you lose in the most and you just need to stay out of it altogether.
When you were starting out and you had this, in your own words, need for money, um, how long ago was this moment when you were starting out your trading?
This was 2021. Yeah.
Okay.
December 2021.
So at that time, prop firms were around. They were getting more and more prevalent. Was that not a route you considered?
I didn't know anything about prop firms when I
Okay.
first started trading. When I was profitable, I was trading a live brokerage. I didn't know anything about, passing and eval and then getting no money from doing the work and then having to trade a couple more days for I didn't know anything about that. I just traded the money that I had. So I've always been a live trader. I will always remain a live trader.
Okay.
And live trading is what actually taught me risk management. If I traded with prop firms, I would have probably tried to size up and lose my money, but just a slow bleed. If I had $600, I wouldn't be able to trade 10 mini contracts with $600, only having 2,500 in equity.
Yes.
That's not something that even exists in a real live account. So I needed to trade based on what my equity could allow me into margin and what I was able to, risk on that trade. But I didn't have that route because I was ignorant of it. I didn't know anything about it. And that's not to say prop firms are, you shouldn't use it. You should definitely leverage it, not depend on it, absolutely. But I didn't know what that video game style of trading was.
If you were to start again, would you recommend or would you use prop firms?
Absolutely not.
Not.
I would not, yeah, because the temptation is there. The whole business model of a prop firm is they prey on your consistency, right? They create rules that will eventually exhaust you. Some will succeed, absolutely, but the business model is to make the business money. And how do you make the business money? By creating rules that's going to essentially have people cut their losses, lose their fees, right? So with something like that, because the business model is a little more predatory, I would not even go that route. I would tell people to just go into a live account and trade small. I would do the same thing myself. I would not change the way that I did it at all.
And what about that feeling of, well, it's going to take a long time because I only have $5,000 to play with, and if I want to get to the 100K account that the prop firms can give me, that might take me forever, and I might blow it in the meantime.
Leverage. Prop firms are leverage. That's all it is. So leverage is the thing that I would tell people to get access to. I'm not saying over leverage. I'm saying that if the same trade cost me $200 in margin that would generally cost me $2,000 in margin. Go for the one that costs you $200 in margin, and now you have a little more to work with in your equity. So leverage is the fastest way to wealth. All prop firms are is leverage. You give
Yes, it's true.
$200, they give you $2,500. That's leverage there, and they give you access to larger contract sizes. So it's just managing a larger position with a smaller entrance fee.
Yeah.
So I would tell people use leverage.
And with your years of experience and probably thousands of trades with the trade frequency that you have, as we end the episode, I want to hear your biggest advice to a new trader who is looking to introduce fractal trading, reaction trading, lower time frame trading, and it seems like so much to learn and kind of overwhelming. Where would you want them to begin, and how would you advise them to start?
Well, I have a free course on YouTube that people can use to learn lower time frame trading, learn the things that they need to see in it. That free course is more than enough for people to find profitability. There's people like Stoic TA that's out there that teaches lower time frame trading with a very direct approach and a system. People need to learn to trade a system, learn how the market moves first, and then you try to trade some model within it. Most people these days are very model driven. Stay away from the model. Look at how it all moves first. In order to drive a car of a specific model on a road, you need to understand the rules of the road and how to operate a vehicle